Crypto Hotep here with another investing video. We are on week 110 of the Family Portfolio and Dividends Tracker. Really appreciate the time, guys. Thank you for tuning in as always. Got some big changes here for the portfolio, so you guys have tuned in for a good episode here. If you're unfamiliar with these episodes, feel free to like, subscribe, comment, and go to week number 1. That way you can get a whole picture idea of why I do these videos week after week, what I'm looking to accomplish for me and my family, and how we're feeling about the market. So basically, this is like a trading journal, and you're following this investing journal, I should say, with me and my family from start to finish. Every week we look through our portfolio, no matter whether it's a red week or a green week, and we discuss certain market events and things that are happening in the markets, how we're feeling, and how we're feeling about our positions. Okay. But by no means is this financial advice. Do your own due diligence and go to a professional if you think about investing into stocks or ETFs or anything like that. But with that being said, guys, we'll jump into the events for this week. This week is gonna see a few fireworks here. So Tuesday, we're recording this on a Monday here, but so Tuesday, tomorrow, you're gonna see ADP employment change weekly. This could be a little bit of a bump here in the markets. Never too much, but we could see something here. And then that's usually all I really pay attention to. I know existing home sales is big for some people, not for me. Wednesday, that's when the fireworks start. So that's when we have CPI and inflation numbers. They come out again, okay? So the consensus for inflation is 4.2%, meaning that consumer prices have risen 4.2% from the last reading. The last reading was 3.8%. Me personally, I don't think that the prices have risen that much to 4.2%. I think maybe they've risen 3.9, maybe 4%. I don't really think 4.2% is the ticket here. So if the number is lower than what the markets are expecting, then that's going to be bullish for the markets. I think we'll get a bullish reading. Again, take it with a grain of salt, do your own research, but I think that we're in line with a bullish reading here. And the only reason I say that is because I look at just kind of where things are priced at. Gas as well. Gas has kind of trickled down from the price shock that it had on everybody. So I think things have settled down somewhat. We're not out of the woods yet, but I don't think it's at 4.2%. I'd be very surprised if this read at like 4.3% tomorrow, or Wednesday, I should say. Thursday, we have PPI, and then we have initial jobless claims. Initial jobless claims, the consensus is 219. We want to see that number lower than 219. That would be bullish for us. And then Friday is Michigan's consumer sentiment. I normally don't pay attention to that. Should I, though? I'm not sure. Comment. Let me know if you guys pay attention to the Michigan consumer sentiment. So let's go to, before we go to week 110, we always go to the week prior, show where we were at. So we had a balance, the family portfolio saw a balance of $4,377.01. That equate to a money-weighted rate of return of a very impressive 5.52%. Dividends earned of $19.07, and then market gain of $202.23. So what happened this week? So this week, we saw a decreased balance a little bit of $4,256.58, money weighted rate of return of 2.19% year to date, and market gain of $64.18, and dividends earned of $23.91. So one thing that I'm going to pause here, because you're going to see shortly here that there's been a lot of change with the portfolio. We have moved away from individual stocks for the family portfolio into exchange traded funds. So everybody's portfolio here has exchange traded funds only and no individual stocks. Well, Crypto Hotep, why did you do that? Well, the reason is I wanted a better way to generate this wealth for my family in a much easier, less stress way. Okay, there's nothing wrong with picking the stocks. Nothing wrong with picking those companies, investing in those companies, and if you do that, more power to you. But for me, I like the cruise control effect that ETFs have on investing. And all it is the ETF itself, I'll show you guys right here. This tool here, stockanalysis.com. So this is a free tool as well. So we're opening up this page of an ETF. ETF's QQQ, probably one of the best ETFs on the market right now. So if we look at this ETF, the ETF itself has over 106 total holdings, meaning that it has over 106 companies within this one ETF, and you can buy this whole ETF. You can buy fractional shares of this ETF as well. Okay, and the top holdings, these are its top 25 holdings here. So the main ones: Nvidia, Apple, Microsoft, Micron, Amazon, Advanced Micro Devices, Google, Tesla, Alphabet, Broadcom, and the likes, right down here. Okay, so again, instead of owning just one company, now you can own multiple companies in this one ETF. Okay, and if we look at the 1 year, we look at the 1 year return, 35.13%, and then the 5 year, 113.12%. The numbers are just going up on QQQ. Okay, this is QQQM, which is the cheaper brother, if you will, of QQQ. So it's the exact same ETF, but it does cost less here on the per share price, and then the expense ratio is a little less as well. Okay, and so bringing it back to the family portfolio, what I did was I used AI, I used Claude, and basically I told Claude our individual family portfolios based on family member, and my prompt was, give me the equivalent for a portfolio with just ETFs, period. And let me know of several good ETFs, the reasons, and those type of things. And that's where I also researched what they gave me, and I used stockanalysis.com to make my selections for our family. And, I feel good about this portfolio. Again, let's go to the activity, though. Between this week and last week, and this week and last week, you're going to see a lot of sells, which we normally don't do, but because we have to reallocate everything, it does trigger selling. Okay, so I'll go into the portfolio to show exactly what sales we did, but then we also had some sales here, and that was my portfolio as I did a little reallocation. And my thought process with mine's a little bit different. We'll get into that too, so stay tuned. So we did get some dividend payments from Sony, which is nice, 64 cents. And so let's go to the portfolio, bottom to top. Unfortunately, wife's at the bottom still, but I think things are going to turn around. So my wife's portfolio is about still above 600 at 602.21. Money weighted rate of return of a negative 4.81%. Dividends earned of $3.20, and then market gain of negative $32.24. So my wife's portfolio is just 3 holdings. Okay, so we have the QQQ. That's the anchor. For me, I want my family to generate wealth from technology, and a technology-based ETF. For me, that's QQQ. I like QQQ. We just saw it on stockanalysis.com and the holdings they have. And I think it's very solid ETF for the long term. Then next we have FSTA, which is Consumer Staples Index. This helped with my wife's holding of like Pepsi. Okay, so consumer staples, long-standing companies that make people's needs, things like food, things that household items that people that need to buy these items. Okay, so that's the consumer staples. And then XLY is consumer discretionary. So consumer discretionary are things outside of needs. So think of wants. When people have an influx of money and then they buy things that they not necessarily need, but make them feel good and want. So companies like Tesla. Tesla's big in XLY. Okay, so those type of holdings is the reason why we have XLY. And very simple percentage here. QQQ is 40%, FSTA is 30%, and then XLY is 30%. So let's go to our next portfolio. Next portfolio is our youngest. Our youngest has a balance of $633.52, money weighted rate of return of positive 3.74%, market gain of $19.16, dividends earned of $2.58. So very similar to my wife's. QQQ is the anchor, Same here for our youngest. QQQ is the anchor. We also have FSTA for consumer staples. And the reason why we did select FSTA as well is because that expense ratio. This is one of the lower cost ETFs as well. XLY, very similar to my wife's. And then we included ESPO. So ESPO, this was the outlier. So ESPO is a video gaming and esports ETF. Great for the kids, right? And it fills that void that Sony had. So Sony was in there because kids love PlayStation, all that. So now they have a ETF specifically for video gaming, and it includes all video gaming companies in this ETF, which is pretty cool. So the QQQ, the allocations, QQQ is the anchor at 40%, FSTA is at 25%, consumer discretionary is at 25%, and then ESPO is at 10%. Okay, and let's go to our middle. Our middle still has a great balance of $641.98, money weighted rate of return of 10.64%, dividends earned of 3.78 or $3.78, and then market gain of $54.78. Similar here, QQQ is the anchor. FSTA is also included in consumer staples. VCR, so Vanguard's consumer discretionary ETF, we chose instead of XLY. The reason being our middle had Target. So XLY doesn't really hold a strong holding in Target, VCR does. So that's why we went the VCR route, and it's low expense as well. And then we include ESPO. So very similar allocation percentage as our youngest as well. Okay. And then let's go to, I'm going to go to our oldest though. Even though our oldest is the top, I want to go to our oldest because mine has a little bit more, there's a little bit more thought process here. So our oldest almost cracked 1,200, so $1,199.06. Money weighted rate of return of 3.82%, dividends earned of $4.84, market gain of $38.19. So our youngest, or our oldest, I should say, has the same setup as my wife's setup. Okay, QQQ is the anchor, 40%, FSTA is 30%, XLY is 30%. Boom, done. Very easy, and this is extremely this process is going to be very easy for us to generate wealth, because all we now have to focus on is just continuously investing, continuously contributing to this portfolio, and it will grow over time. Okay, and then last but not least, let's go to my portfolio. So my portfolio has a balance of $1,179.81, money weighted rate of return of a negative 50.54%, market gain of negative $15.71, and then dividends earned of $9.51. So here's what I did. So with my portfolio, because I use M1 Finance across the whole gamut, so it's not just my family portfolio, but we have a Roth IRA with M1 Finance. We have a dividend-only ETF portfolio with M1 Finance. I have a 3-fund portfolio, and then we have some of our emergency fund in there as well. I felt as though I could have a quote-unquote little fun with my portfolio here because we have all the other pieces in M1 Finance covered from a broad industry perspective. So for this one, I went all in on technology in the sense of semiconductors, cloud computing, cybersecurity, and quantum computing. This, I think, is going to be a 10, 15, 20-year portfolio. You know, I think it's going to be a fantastic growing portfolio. And the reasoning behind all of this is very simplistic. So if we look at, let me see. If we look at SMH, or if we look at SOX, right? So SOX is a semiconductor ETF. So they're chip makers. And instead of betting heavily on the biggest names, this one spreads the bet more evenly across the entire chip industry. SMH is the ETF semiconductors as well. So they make the chips in every phone, computer, TV, so forth and so on. But these are the big names like NVIDIA, Intel, and Taiwan. So these the bigger names are in this semiconductor ETF. So we have those covered. Cloud computing, think of it like this. With cloud computing, everything doesn't get stored on servers anymore and physical servers that people keep in offices anymore. All your photos, Netflix, anything you can think of goes in the cloud. This isn't going anywhere. This is only going to get bigger, especially with the big names Microsoft, Amazon, Google, which are in these portfolio, in this ETF as well. Those are the big players here. They're not going anywhere. So that's why I went to cloud computing. One of my defensive positions is cybersecurity, and cybersecurity is the ticker symbol CIBR, First Trust NASDAQ Cybersecurity ETF. So this ETF owns the companies that basically build like the security systems for the internet, right? The bigger the internet gets, and it will get big, the more these companies are needed to help keep it safe, secure, and compliant. All day, every day. I love this holding here because it helps kind of even out my portfolio a little bit. And then last but not least, quantum computing. So, I'm a big person on quantum computing, especially in relation to crypto, because those are two battling heads. But Google's big with quantum computing right now. And think of it like this: regular computers think, say, one idea or say one thought at a time. Quantum computers can think millions of thoughts simultaneously. So this is a big bet on quantum computing, which I believe it's not going anywhere. I think it's just going to get better and better and better. So this is my portfolio that I'm going to be holding. I'm not changing. I know, we just did change, but I feel as though that the future for technology is not going anywhere. It's just going to expand in the semiconductors, cloud computing, cybersecurity, and then quantum. So I have that at 30%, 25%, 20%, 15, and 10. So that's my portfolio right now. I know the thing with my portfolio, this is going to be very volatile. This portfolio is going to be very, very volatile, and there's going to be huge swings in this portfolio. And you know what? I'm all set. I'm ready to hold it. When we look at this amount here, this is my smallest amount in M1 Finance, period. So again, we can have a little fun with this and see where it takes us. So that's about it, guys. So with week 110 of the family portfolio and dividends tracker, the balance is $4,256.58. Money weighted rate of return year to date of positive 2.19%. Dividends earned of $23.91, and then market gain of $64.18. Guys, if this video is helpful at all, feel free to like, subscribe, comment. Let me know what you think. Let me know if this is a good strategy, if you guys invest in ETFs or if you move from individual stocks to ETFs. Just let me know what you guys think, and please share the video. And as always, guys, thank you and happy investing.